Good morning, everybody. Welcome. My name is Nico, and we're going to be doing some trading. It's Friday, guys. We're about 50 minutes into the UK session. Going to get some trading done. But firstly, those of you that missed the announcement, maybe you didn't get around to the video. Starting today, I'm going to be streaming on a separate channel. The channel name is that. So you guys can just do a search on YouTube, find a search for @NicoJTrading. And I'm going to be streaming once or twice a week. And this channel will be exclusively used for live streams. The nice thing about this is you guys can jump in and we can you can ask questions and I will actually be able to respond and answer in real time. The reason I'm doing this is twofold. First reason is that I did get a few emails from people asking me if I do one-on-one sessions and training, mentorship, stuff like that. And I do it, but it's I'm not too keen on doing it because firstly, it's something that I charge for because during that time I cannot trade, so I lose my trading time. And it's I usually do like 3 hour session, so I charge for that. But you guys will notice I haven't even mentioned it in the previous videos because it's not something I'm really keen to do. So live streaming will kind of alleviate that. It's not going to be one-on-one, but it is going to be live, so you guys can ask questions and I will answer all the questions during the course of the stream. So that's a good thing. And secondly, you guys know that a while ago I teamed up with Pocket Option to do some live streams on their YouTube channel. This actually went pretty well. Okay, so it was quite successful. So I'm going to start doing it on my own. That's also part of the reason I decided to do streaming. I'm also going to kind of keep it in the format that we did that I did with Pocket Option. So these videos will be a little bit different than my from my daily trading videos that we've been doing. I'm going to be looking at specific topics as we go along. So I'm going to be discussing different strategies, different indicators, different ways. You know, it's a bunch of stuff. But every stream will have a specific focus on something. So yeah, I really hope to see you guys there. If you don't want to miss out, head over there. I'll also leave a link in the description to that YouTube channel, so you guys can follow that and just head over there. Hopefully, I see a lot of you there. And if you guys do go there, hit that subscribe button. Let's get the channel growing. Again, guys, my stuff's not monetized. I'm not making money from YouTube doing this. So you guys will notice there's no ads in my videos. But I would like to. There's so many nonsense videos out there, promising people big money and quick money, and that's not the way it goes. So we're going to be doing things right. I'm trying to show people the real way, the real way trading is. It's not easy. Although relatively simple, it's not easy, and it's going to take a while to make decent money, especially if you're a beginner. A lot of people tend to just jump in. Excuse me. So a lot of people tend to jump in and make a bunch of mistakes. Okay, so we're gonna that's the news. And before we go over to the charts today, I want to have a little chat about martingale, because I see a lot of people use this wrong. What a lot of people tend to do is they'll have a strategy, and most traders that use martingale would trade off 1 minute charts and they take 1 minute trades. Okay, so what happens is that they will take a trade and that trade loses. It hits expiry and it's a losing trade. What they would do is immediately martingale. And that's not a very firstly it's the wrong way of using martingale, but it's also a foolish way of using martingale because you're doubling down on a losing trade. And guys that do this gets away with it for a little bit until the asset that they are trading goes into a strong trend. Then we see a couple of candles and they keep betting that it will turn, and they wipe their accounts in 5-6 minutes. I'm going to show you guys quickly why it's a bad idea to, especially, first of all, I think it's a bad idea to use martingale in options. I'm going to show you why I think this, and I'm also going to show you guys why it's a bad idea to actually double down on a losing trade. Okay, so we're going to be doing a little bit of math here. If I take, let's suppose the payout that I'm trading is 90%. Actually, you know what? Let's make it 80% because that's like the average, right? That's usually your payouts. If I want to martingale, let's say I do a $1 trade. If I want to martingale this, the first thing you will notice that even if I double my trade on the next trade, I am making less and less money. And on my fourth step, I will actually be losing money, right? And then from there, so first of all, if you really want to martingale, especially if you want to martingale, it actually needs to be more than double. So that's even worse. So let's make this 2.4. Actually, let me just check. Yeah. Okay, so 2.3. 2.3 will keep you roughly, it'll increase the profit with each failed step just a little bit. But that's kind of like the minimum. I don't think you'll be able to do 2.2. 2.2 will still put you in a basically in a loss. So 2.3 on an 80% payout is that's the minimum you should martingale. You can martingale to actually make money. Now here's the other thing. If I do a 5-step martingale, I am risking, if I win my 5th step, I'm risking $20 to make $1.60. And that's not the smart thing to do. Doing a normal trade, let's say I'm doing $1 trades, I'm risking $1 for a 80 cents return. That's fine. Okay, that's a good risk ratio. But risking $20 to make $1.63 is not the smartest move. On top of that, if you lose that trade, that means you risk you're going to lose $50. All the while you're trying to make not even $2. And this will happen. I promise you this will happen. Market will go into a run. Especially for the guys that's doubling down on the losing trade. They keep taking puts the next candle in an upwards trend, or keep taking calls in a downwards trend. And I've seen so many people say, oh, it's been 3 candles, it must go up. I've seen runs of 20 plus candles in one direction where we had like 20 red candles. There's no such thing as it must go up. This is a foolish strategy, in my opinion, to use. I used to trade like a 2.4 martingale, and I once lost in 15 minutes. I think the total was like 30,000 or something. So yeah, it does go wrong. So it's not something that I recommend people trade. If you do want to use martingale though, the correct way of using martingale would be wait for an entry from your strategy. When that strategy gives you an entry, you take the trade. If that trade loses, you can use martingale on your next entry from your strategy. Not immediately. You wait for the next entry from your strategy. So if that one fails, again, you wait for the next entry. You never double down on a losing trade, because that most of the time that's going to burn you horribly. But still, if you're doing a 2.4 martingale and you're starting with $1 trades, you're risking basically $56 to make $3.56. And that's a horrible risk ratio. Okay. I would much rather do $10 trades instead of one. Do $10 trades and just keep them on $10 and keep going. My the risk of me losing 5 trades in a row is fairly low. Does happen. But at least, even if I lose 5 trades in a row doing $10 trades, I'm going to lose less than I would if I do $1 trades and martingale at 5 steps. Because if I lose $10 trades, 5 $10 trades in a row, it's only $50. So it's still less than I would lose on a martingale, 5-step martingale. And it will happen. So yeah, that's the reason. I just wanted to explain to you guys, this is why I don't use martingale. I stay on the trade size. I calculate my trade size at the beginning of the day based on a percentage of my balance. And that's the size I trade with. I don't change it during the day. So I don't use martingale because it's a very quick way to wipe accounts. But if you really insist on using it, just at least use it correctly. Do not double down on losing trades. Take a trade, and if you really do want to martingale it, you martingale on your next entry from whatever strategy you're using. You don't martingale immediately on a losing trade, because you're just doubling down on a losing trade, and that's not a very smart thing to do. Okay, so I'm just going to delete this. Let's get to trading. We're still using our 3 core strategies, which is divergence. We're using the ADX to find sharp hollow moves, where there's massive price movement but not a lot of strength behind the price, telling us there's potential for the price to reverse fairly quickly. And then we're also going to be using the RSI, where when price goes into a trend, we're going to look for corrections. And if those corrections gets rejected on the RSI middle line, we're just going to take a continuation trend in the direction of what that price is moving. And we're going to see if we can make some money there. I also want to apologize if there's a noise. That it should die down quite soon. I live in a complex, and at the moment garden services is here, so I'm really hoping my mic doesn't pick up too much of the noise. It doesn't look like it is, but if there is, I do apologize. They will be done soon. Just bear with me. I cannot really wait for them to finish up to make the videos, because they do take time, and I actually do want to get to trading as well. So let's see what's happening. We got Euro USD. There is, we just had a data release, but it's the German climate. As we can see, it didn't really move the market. That was the release. So there's no major movement like we had in yesterday's video, where we watched the PMI hit of the different countries. We had the French and the German while we were doing the video, and those were massive moves, huge gaps. This is not something I consider violent reaction, if we can put it that way. I don't trade. I stop trading when there is a violent reaction to data being released, like we had yesterday. I simply stop trading, wait for the indicators and the market to just settle down, and then I'll continue. But with this, we can actually continue trading. There was no real reaction. It's well within the normal price movement. It didn't even really make a new high or low from the previous 5 minutes worth of trading. So we're good. We can carry on. It does look, I'm just gonna have a quick look at the higher time frame, see where we're at. Okay, so we made a little, we had what's that, range. We had a pullback, push up again, and now it's heading for this area here. Let's see if we can get some trades. We've got the ADX climbing, telling me there's some strength coming into this drop here. I can look for corrections. I can start looking for corrections, because it's kind of like a confirmed trend. We're well below the moving averages as well. So I'm thinking if the RSI hits here, gets rejected, we might risk a sell trade. Might actually, if it does go up a little bit more, if we keep getting a few green candles, even if they're not big, we should get some hidden bearish divergence forming here as well. I would have really liked for it to go up a bit more. So my RSI didn't form bearish divergence, so no trade for us at the moment. Let's see if we can maybe get something else. And remember, guys, if you're new to these videos, the strategies we're using in these videos will work on any time frame. If you want to trade on 1 minute charts, you're more than welcome to. You're just gonna your expiry should be a bit longer, like 5 minutes maybe. If you want to trade 5 minute charts, you want to do a 10-minute expiry, a 1 hour expiry, or a 30-minute expiry even. And you can also use these to find entries for forex trading, right? So starting next week, I will be getting into forex a little bit. We're going to be looking at not so much as at strategies, because the strategies we have been discussing, I actually use on forex as well, plus 1 or 2 other things. Those we will discuss. Because forex is a little bit different, but we're also going to look at trade management. You can get away with a much lower win rate on forex and still make money, whereas on options, I think you need like a 60% win rate on a 70% payout just to basically break even. So that's the minimum you can do on options. Whereas if you do forex right, you can actually make money with a 30% win rate. You can have a 30% win rate and still be profitable if you know how to manage your trades, and if you don't stay in losing trades too long. Get out before it gets too bad, stuff like that. So I'll be looking at a lot of those things as well. And yeah, but the live trading we're going to start doing now will be options only. That will always we're only going to do options on the streaming, because that's like kind of what the biggest demand is for, if that makes sense. So yeah, but I'm really looking forward to this, and I really do hope I see all of you there, and that we can grow that channel and get just get the word out, get more people to do trading the right way. That would be really nice. Okay, let's see. This could be just like a sloppy retest. It doesn't could go down, could go up. Let's see. Doesn't look like there's too much. It doesn't look like it's gonna be a rough day. We should have relatively smooth movement until the US opens at least. There is some data on the way from the US, but that's only in the US session. We're not gonna worry about that in this video. Let's see if we can hook some trades here. Remember, guys, sometimes the market will give us many entries. Sometimes the market doesn't give us many entries. That was a big reason in me starting to make videos again, because a lot of people have good strategies, or at least decent strategies, but they don't know actually how to trade. So they end up watching the market, and if they don't get an entry for 5 minutes or 10 minutes, they think they're doing something wrong and they start forcing trades, which is a huge mistake. You never force trades. We always stay within the parameters of our strategy, always. Once you have your strategy, you just stick to it, right? So how do we know a strategy is good? Well, we test it. We back test it, and we test it real time. And when we test it, just to give you guys an example, before I use a strategy, I get sent a lot of strategies, and if something looks decent to me, I won't use it before I've tested at least 1,000 trades. That's the extent to what I test strategies before I consider using them. So test your strategies, and you're going to do two kinds of tests. You're going to do a back test, which is very easy and it saves you time, right? So you know that, let's say you want to back test divergence. So you can just basically open up a chart and just start scrolling back and look for areas where divergence took place, and see for what's today, Fridays. So you might go to yesterday on a 10-second chart and go and see, okay, fine, we had so many divergences. If I traded all of them, I would have won this many trades out of this many, and that's an easy way to test. But the other way you need to test as well, and you kind of have to, is by doing live trading. This will be, when I say live trading, on a demo, please, on a demo. But what I mean is you have to trade the strategy as well, because you kind of need to determine. We have some bullish divergence here. Actually, I'm talking and I'm missing this. Let's see if this pushes back here. It is kind of like bullish divergence, but it's sloppy. I don't like it that much, but it is valid. I'm going to go with it. So you need to trade the strategy a bit as well, even if it's on demo, or it should be on demo if it's new to you, to see if you can actually manage to get entries with that strategy. Because that's oftentimes people will backtest something and they'll look at the results and say, oh, this looks good, I'm going to use it. But then when they actually start trading, they find out that they don't know exactly how to take entries, and they're failing, and their win rate goes down a lot, right? But when they backtest, they will trade for a day and have a horrible win rate. Then at the end of the day, they'll backtest and say, oh, and they'll look at the results and think, but I was supposed to have a good day. I wasn't supposed to lose money. This might have been a good strategy. And it's because they didn't actually practice using the strategy, which is also important. Okay, so that's how I test strategies, and that's how you should. It doesn't matter what the source of the strategy is. Even if you hear a strategy here on my channel and one of my videos, if I show you something that I'm looking at or whatnot, don't even take my word for it. You don't take anybody's word for when it comes to money. Don't just say, okay, fine. If Nico said so it must be a good strategy. Please don't. Test everything. It doesn't matter where you get it from. Test everything before you actually use it on a live account. We had a good trade. We had the bullish divergence play out here. So if we look at the oscillator, this was my previous low, and then I had this low here. Right, so my oscillator made a very nice lower low, quite a bit, but price didn't even come close to, was a lot higher. The new low of price was a lot higher than the previous low, so we made a higher low on price, a lower low on the stochastic. Not so much the RSI, but that's fine. I do mainly use the stochastic for divergence, although I do use the RSI as well. If it's a very nice setup on the RSI, I'll consider it, but most of the time I just look at the stochastic. And we had a good trade. Let's see if we can find something else. We are in an uptrend. We might get a trade. I would like this to come down a bit. Let's see if this touches and it rejects immediately. Remember the RSI strat said needs to be in an established trend and also needs to be on or very close to our moving averages. Or since we use the middle Bollinger Band as well that we introduced earlier this week. The Bollingers are new on the chart. So I'm not going to take this because this was kind of in the middle of nowhere and could go either way. So I'm leaving that, even though we did get the hit on the RSI and it actually did get rejected. I'm not going to risk. It's outside of the parameters of my strategy, so I'm not taking the trade. It's as simple as that. We did, however, get some more hidden divergence here. It's exactly the same. Oscillator made a new low, and price made oscillator made a lower low from the previous trough, and then price made a higher low from the previous trough. This one was a bit difficult though. I tend to avoid them if they look, because it formed the diff confirmed on the stochastic on this candle. Might even argue on that candle. That's too much of a pullback for me. This is fine because it's flowing, but this isn't really flow. This is a massive drop and a massive retrace immediately. So if I do get divergence on a move like this, I'll just skip it. Whereas this is like normal flow. But we did have some divergence there. And if I took it on this candle here, you know, would have been a bad trade. And you could argue if you took it here, but divergence hasn't formed here yet, right? So it only formed technically not even on that candle there. So that would be that one. That's where you could, I probably, if I did decide to take the trade, I would have taken it on that candle there probably, and it would have been a bad trade. Okay, so if divergence forms and it's a sudden silly movement like this, don't worry about it, just skip it. We're going to get more entries. We're only 26 minutes into this video, and I've been blabbering a lot for a decent part of it. So we're getting entries. It's not a bad day. The market is not. It's actually decent. There's no silly moves. Market is flowing. I can see my oscillator oscillating, which is good. That's what you want. As a rule of thumb for me, the smoother the stochastic is on a chart, the more it indicates to me a great trade time to trade. And the more choppy it gets, the more cautious I get because we get stuff. Then we start seeing stuff like this. Okay, so when we see stuff like this, it's fine if it's one or two candles. It doesn't bother me because that won't choppy out, you know, it won't make the oscillator that choppy. But if forgot the auto scroll is on. If we get like this movement like this, I wouldn't try looking for divergence in moves like this. Okay, this though, this is fine because the oscillator is flowing. It's not choppy like this and like this here. So if you see the oscillators do this, just like don't, you know, maybe just skip divergence for a bit. Doesn't mean you can't trade. If you still get a good setup, take it, you know. But just exercise a little bit of caution. When your indicators start getting really choppy, just exercise a little bit of caution so you can, you know, just be aware that we have some volatility. Might be an issue for some trades, and this is something you learn with time. This is not something, you know, it's I can teach you all this stuff, everything I know, but getting the experience to identify areas where the market starts getting I would say when the market starts getting a bit stubborn, you know, that's a feeling you will only develop over time. Some days I sit down in front of the charts and I just got a feeling. I just look at the charts and I just got a feeling it's going to be a horrible day. And then usually I just won't trade. I just won't trade. It doesn't happen often, but sometimes the market movement is just, you know, you look at it and you think, oh, I won't be able to trade this. And then I'll go do something else. I love saying it. Go do something else. A lot of people have FOMO. They will sit and force themselves to trade for hours, and you can't do that. Breaks are important. Even just taking, you know, every hour take a break for 15 minutes or so. You can't fully sustain. We don't realize it, but this is actually a lot of thinking, and this puts a lot of stress on your mind. If you're trading and you're looking for entries, and because in your head you're basically doing a bunch of calculations. So take the time to take a break. What we have here, I would have liked to see this just a bit higher. This this high. Yeah, I would have liked to see it a bit higher because we might have had divergence there. At the moment, nothing. But we are in an established uptrend. So what we can look for now is corrections like this. But this it's kind of sloppy correction, but still valid. Still a correction. Remember, when corrections happen, when price moves up in a direction, comes back a little bit, and then continues, or if it's moving down, comes back a bit, continues. Those are corrections. And if we are in an established trend, we can look for corrections where the RSI, it's the middle line, on or near the moving averages, gets rejected. We get some trade opportunities. At the moment, there's nothing for us. We don't have divergence. We have the ADX climbing really hard, so a lot of strength behind this move. We're not going to even consider taking a sell trade if the ADX starts turning. Remember, the ADX does not show direction. It shows us the strength of the current move. So if we're in an upwards move like this, when my ADX starts turning down, all it's telling me is that the strength of the current move is weakening a little bit. Does not tell us that price is actually going to change direction. Always remember that, please, especially if you use the ADX. It's such a wonderful tool. The ADX, it's probably my favorite indicator of all times because it gives me a lot of information. I think if I could only use one indicator for the rest of my life, that would be the ADX. But you need to understand what it shows you. You need to know how to interpret the data, and that you can do that by going to like Baby Pips or Investopedia or whatever, and do a search for average directional index. It's the average directional index, or some people also call it average directional movement. And just have a look at it to see how it's calculated. Look at the math behind it, so you can understand what it's actually showing you and how to interpret the data. We might have some bullish divergence here, hidden bullish. I don't have a reason though yet to take it. It's not confirmed. I'm really not fond of. I would like it to confirm, to get a second confirmation somewhere else on the divergence. But let's see what happens. Do we get the formation? I need some opening up here. I'm going to do a buy again because we did form the divergence, and I'm not going to second guess my strategies. I know there will be losing trades during the day. I never win all of my trades, but I stick to my strat. And if my strategy tells me it's time to take a trade, just take the trade, and we'll then wait and see what happens. It does suck though if you lose a trade. It's never nice, but it's unavoidable. But if you tested your strategy and you stick to it, and you know it's profitable, and just stick to it, the market will reward you for that. I'm going to lose this one. 5 seconds left. But it's okay. We'll just wait for the next entry now and take the next trade. There is no more valid divergence, by the way, because we had a trough here, a pushback, and another trough here, kind of. Oscillator is now moving along with price, so there is no divergence. So I'm not taking another trade here. We're going to wait for our next entries, though it's probably going to push out now. We did speak about the Bollinger Squeeze earlier this week. So we had a little squeeze there where price was moving in. The Bollinger Bands contracted and price was moving. It's like a little tunnel, and then when it finally picked a direction, price went with that band. If we do see the same here, I will do the same kind of trade. So we're going to sit and wait. If it does turn into a squeeze for a few candles, a proper squeeze, then we're going to just wait and see to which way it actually breaks, and we'll take a trade in that direction. Remember, like this is a contraction. Don't get squeeze needs to last for a while. These are just contractions. Okay, I'm going to take a sell here, and then I'm going to take auto scroll off. So this is just a contraction. We can't really squeeze usually signals quite a run, you know, a fairly decent sized movement. This was not, because this wasn't a squeeze. All right, we don't the Bollinger Bands will always contract, but this was a decent squeeze, and this one not so much, but it's fairly decent. I would have loved to see just some more red for a while. But this is a fairly decent squeeze. We've got 1, 2, 3, 4, 5, 6, 7, 8 candles before it started opening up. So it's been a squeeze for a while, right? So it's not just a contraction for 1 or 2 or 3 candles and then opening up again. It looks like we're gonna have a moody day though. Oh, this is frustrating. It's probably gonna tag now. It looks like it wants to. Okay, so we are a wee bit down for the day. Not ideal, but it's okay. It happens. If I was martingaling that, this would have been a different scenario. I would have been, I mean, can you imagine if I martingale this straight size here? I would have been over $1,000 in the red now. So that's why I do not do it. But it's really no stress. If I do lose a trade, I don't get freaked out. I just stick to my strategy because I know it works. I know it's been proven over time, and I just need to continue trading it. I'll maybe win the next 3 or 4 trades entries I take. As long as we close green, I'm happy. I'm not too fond of closing a day on the red. Doesn't happen often, but it does happen, and it's never fun. But it does happen. And I really hope today isn't one of those days. We should get an entry soon though. It's actually been good trading. We had 3 entries in the course of like less than 20 minutes. Yeah, looks like less than 20 minutes, or let's say 20 minutes. We had 3 entries already, which is a decent amount. We're on almost 40 minutes on this video now, so I should get 2 or 3 more entries soon-ish, and then we can, you know, probably see if we can end this day green, or at least end the video green. My trading day is not over. Okay, so we're ignoring the RSI for the moment because this is not an established downtrend. We have been moving upwards for quite a while. So I won't risk calls here on the, sell trades here on the RSI. If I get hidden divergence, I would do a sell trade. The hidden divergence tends to work really well because it's continuation signal. It does tend to work really well, but other kinds of sell signals, or the RSI at the moment, it's not valid for me because we need to be in a strong established trend, and we're not. So we're going to wait a bit and see what the little miss market gives us. So technically, I do have hidden divergence at the moment if we do not make a higher high. Let's just see what happens. If this closes and I get a nice open here, I will take a sell trade because this technically is divergence. There we go. Should go down. We'll wait and see. Looks like it's going to be good. If this trade wins, I'm going to be basically at break even for the day. Looks like it's going to be good though. Uh, 28 times 256. So I'm only down 56 now, which is not that bad. I can live with that. That's why a nice, a decent payout is so. Decent payout is very forgiving. You recover very quickly. I did 2 trades now. I'm trading with a trade size of $350. I won 2 and I lost 2. So basically, right now I only lost $56. If I do another trade now, I'm still gonna be up like 270, 266. I'll still be up 266 at least for the for this video. If we find another one, or my next trade will put me in the green for 266. So it's very forgiving. It gets a lot harder when your payouts start going down. If you're trading 80%, for example, it takes longer to recover. If you may have a misstep, it just takes longer to recover. Which is why I like pocket option. Especially, I basically only trade Euro USD for options. It's the most traded asset in the world. It's got the highest volume, so it means, and a lot of people might not understand when I say this, but it's the smoothest asset there is, in my opinion. Because we have this massive volume, it's easy to read. It's in general, it's easy to read. I cannot, for example, if you want to see me make, if you really want to see me lose money, put me on one of the Canadian dollar pairs. I can't read those. I struggle with those because they move differently. And it's not that they don't have that much volume. They don't have such a high trade volume as the Euro USD. Euros for me is fairly easy to read. I was making a point now. I can't remember what the point is that I was making. Oh, payouts. And so pocket option actually gives 92% payout on Euro USD most of the day. It does change, but for most of the time it's 92%. So it's easier to make money. If you can actually do the calculation, what would your payout be on this amount? And then how much would you have lost if you had, if 80% payout, for example, but you did the same trades as, you had the same trade size as I did. You would see that, you know what, actually, we can actually do that. Let's do that calculation. It doesn't look like something's going to happen, yeah? Payouts. Trade size. No. This will have to go in here. No, we'll go in here. This equals. Whoopsie. No, it's gonna be the whole. I'm getting super distracted now. I'm not. About 80%. Let's say you did 350, so I got 280 there. But these I'm gonna make minus 350, minus 350, and let's leave those blank for now. So this would be $140 down. Whereas on a 92%, I'm only 56 down, and it's going to be easier to recover. So the higher your payouts is, the more forgiving it is the more forgiving your strategy gets. It's one thing to look out for, you know, not to trade when the payouts are too low. Then it gets worse on 70% or 65% or something. I don't trade on anything less than 80. Okay, we are definitely in an established trend. Let's see if we can find a correction. We should see one somewhere here now, because this ADX has been moving up for quite a while. It doesn't mean it has to come down a bit, but it should. We should see it come down a bit. So what it means is when it starts turning downwards, we know we can expect a possible correction. It doesn't mean it will happen, but we might get a correction, and I suspect if it hits here, we're going to see the RSI hit the middle, gets rejected. We're probably going to see some hidden divergence, maybe. Didn't quite make it to the moving average. So for now, I'm out. It could still go. Could very well still go. All right, so we're just gonna sit and see if it hits one of my moving averages here, and then if it hits the RSI at the same time. Although I think this might be the turn. Didn't quite hit though. So let's just give it a second. We're gonna wait and see, but I suspect we're gonna see a further push down soon. Just need to see if we can actually get a way of timing it. RSI did hit now. I'm going to take a sell here because my RSI did hit. So we should see some more downwards movement. It did get rejected as well. Okay, so I waited for it to get to turn away from the middle line again. So we are getting closer to the moving average here. It should push down. Should see some more red here. It's being stubborn. Very stubborn. I really don't like these really close trades. It's good though. We're green. There we go. Now it's moving. Okay, so instead of jumping the gun, if we took a trade here, we might have been in trouble, but just waited for the RSI to tap. We are in an established downwards trend, and we took our trade here, which was close to the moving averages when the RSI got rejected right on that candle, and waiting for our strategy and staying within the parameters of our entry conditions, or within the entry parameters of our strategies, we get rewarded. Okay, guys, that's 50 minutes. I think we're going to stop it here. I really hope I see you guys, well, all of you in the stream this afternoon. I hope you guys can make it. And yes, it's been great. It's been a good week. Take it easy. If you don't feel like trading, don't. But as always, trade smart and trade safe. And yeah, I'll see you guys either next week or hopefully in this afternoon stream. Have a great weekend. Goodbye.